What's going on, YouTube Nation? This is GB Merce. This is my new niche as I change my name and investing in you. I promised you I'd start on stocks and how I was inspired to spread my wisdom to you guys about investing in yourself and investing in your future. And there is a way that you can generate passive income and have multiple sources of income coming in, not just from active but from passive. That's by dividend stocks. So I'm going to teach you how to invest in dividend stocks, but first you really need to understand the basics. Rule 101, what is your plan? You need to ask yourself your plan. You need to ask yourself your strategy. You need to understand your strategy. Do you want to treat dividend stocks as passive income? Do you want to put away stocks for retirement? Do you want to use dividends for passive income? Okay. Do you want to use the dividends to grow for your Roth IRA or IRA? Or do you want to sell your shares when you're retired? So everybody has multiple strategies. I'll go into detail with the IRA or Roth IRA, how to invest and take advantage of the IRA and Roth IRA. I'll explain the pros and cons of them. The other one is, do you plan on buying or selling stocks? Do you plan on being a gunslinger? When something goes up $100, do you plan on selling it right away and reporting that as capital, and reporting the capital gains tax? I can tell you, when I didn't stick to my plan, I decided to buy in some penny stocks. My strategy was to invest in dividend stocks, and sometimes I lost some money, and I was a little bit of a gunslinger with buying and selling stocks. And I went back to my basics and back to my plan. It is important that you stick to your plan. Sometimes you have to be flexible, but try not to be flexible. Stick to your strategy and go from there. Here's the other question. Do you have the money? Do you have the money to invest in stocks? Sometimes people are in a lot of debt. People are, trying to find new jobs or trying to move somewhere or saving up for furniture and stuff. Sometimes you have to put that on hold, and then you can start putting that in stocks. Here's an important topic. Do you have the patience and discipline? Investing in dividend stocks, it takes time. You have to be patient. You have to be disciplined. You have to understand the growth in compound interest. Compound interest is something that grows over time. It doesn't happen overnight. Just like I, joke around and say that money grows on trees with stocks. It does. Trees grow over time. You plant a seed, you plant your investment, and it grows over time. So you have to have the patience and discipline when you invest in dividend stocks. Another important topic is, do you understand the pros and cons of dividend investing? So some pros, I'll just give you some examples. It's going to grow over time. You're going to make extra money. But the cons are, some cons are you have to report that as income when you file for taxes, because you have to report dividend stocks as income, which could increase your tax bracket, which could increase you paying taxes in the long run. There is also a pro. Once you increase a certain tax bracket, you can get better money off of Social Security. So the other thing is, in the bottom part, do you understand the tax rules? Now, this is something that you should probably talk to your financial advisor or your, somebody that's involved with tax, lawyer or your accountant. Those are the best people to ask questions for when you go into investing in dividend stocks or you plan on investing in dividend stocks. I do not have a license. I am not a professional, but I will show you some of the stocks that I invest in, and I will show you that I have been successful and I am growing my net income every day. So that's my goal with my plan, is to grow my net income or my net worth and grow and grow and grow. So my plan is to be patient for 25 years. Maybe some of them might go big. Some of my private REITs might go public, and maybe I might decide to flip it and just take that as passive income. So you need to stick with a plan, and you need to be a little bit flexible, but really you have to stick to your plan. This is one of my favorite quotes. This comes with investing in stocks. Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. Okay? Think about this. I will have a future lecture on compound interest. I will show you a compound interest calculator that you can do. I will show you certain websites that can calculate compound interest for you. This is something that is important, and your money will make money. Your money will grow on trees when you invest in the stock market and dividend stocks. I love investing in monthly or quarterly dividend stocks. I will not do yearly. Again, my plan was to make passive income, and I did put some money in some semi-annually and annual stocks, and it just wasn't even worth it. So I love the monthly and quarterly stocks. And again, once you start reinvesting the dividends, your dividends will start buying off new shares, and then the compound interest will grow. You have to really understand that, and this is where the discipline comes in. Now here's another thing. Your plan could be my plan, okay? Now let me just read you this, okay? Dividend stocks are a great way to treat yourself to passive income, which can help you. For example, I'll just say Joe Schmo, he bought a stock and he has enough shares to pay for his monthly utilities. He no longer worries about paying for his gas or electric or water bill because his dividend stocks are providing extra source of income to pay his stocks. That was a little bit of a typo, I apologize. But look at this, okay? One of my goals with my dividend stocks is to pay for my utilities, so I don't have to worry about that, okay? Right now, I'm making, I should probably not say this, but I'll say it anyways, about $600 a year, okay, on my stocks. That can pay for my apartment electric bill, as well as my water bill right now. But really, I am valuing and taking advantage and capitalizing on compound interest. My goal is to make $1,000 to $2,000 a month on passive income. So there is no reason for me to just take the dividends from my stocks. I want them to grow over time, and I want to make money, okay? 400 is great, this and that, but really I want more. I really think that you guys should be patient and let it grow, and you can treat that as a retirement pension. Here's the thing, dividend stocks are a great way for an extra source of income. I've heard stories, I've ran into people. This past year at Myrtle Beach, I ran into a guy at the pool. I know last year a guy, empowered me to teach my wisdom to you guys. But another guy I ran into at the pool, he's invested in dividend stocks, monthly income stocks, and he took money out of his 401k and just threw it in dividend stocks. He's actually making about $6,000 a month on passive income with dividend stocks. Some of these stocks are growing. I was invested in a lot of the same stocks that he was invested in, and he joked around and called me his second son. So this is something, in my future lectures, I will discuss how to surround yourself with good people and go-getters, because they empower you to become better individuals. You'll be a better listener, and you will be more focused on yourself and investing in yourself. Dividend stocks can become a hobby. This is another thing. I'll wake up in the morning before I go to work, maybe about 10-15 minutes, Google search on some of the really good reputable sites about new stocks out there, dividend stocks or real estate investments trusts that are out there. I actually love investing. It became a hobby for me. Now I'm at work, I'll run into people I work with, and since we're getting older, we're talking about stocks. We're not talking about getting drunk or going to parties or how we got wasted, in a certain game. It's funny because, it brings up a conversation. You can learn from these guys too. So that's the thing with surrounding yourself with go-getters and people that are successful. You can have a conversation with somebody. I actually got a date with a girl. She was invested in stocks, and, things didn't work out, but still, I'm actually good friends with her still. So, we contact each other and talk about new stocks or something, or even phone conversations about stocks. And it's been fun. I mean, now I got invited to some real estate investing areas in Northeast Ohio because some of my buddies are doing it, and I can meet new people and network. Dividend stocks can help you develop discipline and make you smarter with your money. It did for me, and honestly, it did. It taught me to be patient. It taught me to be smarter with my money. Sometimes I would go out, treat myself to dinners and stuff, and when there's half off. But really, why would I do that when I can pick up shifts and put money in my dividend stocks for that extra paycheck or so, or an extra $100 to throw into my dividend stocks and let my money grow? So it really helped me develop discipline. It actually helped me focus more on my mind and body. So I've been training a lot harder because I'm not going out and I don't feel hungover as much or getting hungover. I'm just very disciplined with the way that I become with my money. I am planning on going to graduate school as well, so I want to have a certain amount of money in my bank account for that. And with picking up shifts and having this discipline, I could throw X amount of dollars in, and I'll make sure that I don't, spend it on other stuff. So this really changed my mindset and held me more laser focused on my career and how to become better investor. Here's the thing: I avoid panic selling at all costs. This is one of my favorite quotes. To understand your plan, you can only fight the way you practice. Okay? If you are a panic seller, if you are a gunslinger, you are not going to be a successful one if you have a plan and you're focused and you're practicing on your dividend stocks. Okay? So you got to stick with your plan. Again, buying, trading and selling, I don't got time for that. I want my money to make money. I'm not a day trader. There's huge risks with that. I'm telling you, I've heard a horror story with somebody. They could have probably retired on dividends from Domino's, but they put money in for a dividend stock of Domino's when it was like $5 a share. They had about 4,000 shares, and once it got to $8, they sold it, and they could have retired off these dividends now. So they're still kicking themselves in the shin because they were worried about a certain bug or recall or something like that. And you just have to be patient. Okay, you got to practice to not panic sell. I'm telling you right now, panic selling is bad. That actually, from what people said, that hurt the economy even worse when the recession hit in 2008. So stick with your plan, hold on to those stocks, and let it ride, man. Let it fly. Okay. Here's another question: do you have the money? Sometimes you just don't. Okay, because of debt. If you have kids, or paying for school, or transportation, or gas, or utilities, sometimes you just don't have the money. Okay, and that's understandable. Pay off your debt fast. Earlier. If you financially are living paycheck to paycheck, I would be careful with this. But just be smart with your money. I mean, but there is one thing. Okay, in this bottom topic, could you manage to throw $10, $20, $50, $100, or $200 a month in stocks? There is a website where you can make your own portfolio and throw X amount of dollars a month in for stocks. So throwing $10 in a month is not going to really hurt you because your money will still make money. That is one thing I want to address with you guys. Obviously, the more money you put in, you're going to get more money out from dividends in the future. But, if you can only manage to afford $10 or $20 or $50 a month, hey, there you go. $10. Okay, that $10 will grow over time, and you'll probably, by the time you retire, you'll have an extra source of income, not just from your 401k or 403k. So investing in yourself is important. Okay, you got to invest in the right career. Invest in clothes or fashion watches like me. investing in yourself is important. How you present yourself. You want to dress well when you're somewhere, so you got to have some money for nice clothes. Got to have money for food, obviously. You can live cheap. I mean, you can grill chicken. Chicken's very healthy in protein, and it's white meat, so that's one thing that you can consider. When you're investing in yourself, you can invest in supplements. I did a review on Premier Protein. If you look at my channel, it's getting a lot of hits. It's up there. I'm very close to 1,000 views right now. And don't forget your housing situation. So once you soup up your house or make advancements with your house, you can sell your house for a lot more. If you're in a nice area, of course you have to report the capital gains tax, but you selling your house, you can maybe pay for the new house when you sell it. So that's something that's important as well. And I also invest in very nice coffee, by the way, which I will be doing reviews on some websites as well. Understand that your money will make money, okay? Your money will grow. When you put money in a 401k, that will grow. When you put it in a Roth IRA or an IRA, that's going to grow. But here's the other thing. You need to understand the $10,000 investment in the hypothetical growth chart before you start putting money in stocks. So I will show that in this next slide. So here's the hypothetical growth of $10,000. I'm using Vanguard VYM. I am invested in Vanguard VYM. So if you go on websites like E-Trade or Vanguard or all the reputable sites out there that are really good trading sites, they'll show you if you put $10,000 in, okay, how much your value of your stock would be. Obviously, this is a really good growth. This is an aggressive stock. I will be doing a review on Vanguard VYM. I did have like 15 or 16 shares in it, and I sold it, and I'm really kicking myself in the shin. But I am rebounding right now because I have it in another portfolio, which is great, and I'm putting money in each month towards Vanguard VYM. But here's something that you need to look at when you're on websites, okay? So how is this growing, okay? Usually they compare themselves to the S&P and how it's growing against the S&P. That's something that I will go over in the future. So this is something that you need to look into. Obviously, I love Vanguard stocks. This is one of my favorite stocks with Vanguard. And I will do a review on VYM in the future. So just understand this when you're looking at stocks on websites of how they grow if you put $10,000 in. So there's two types of stocks that you need to understand. There's growth stocks. These are shares when you buy that focus on capital growth instead of dividends. Growth stocks are the essential shares in these companies that are generating positive cash flows and whose earnings are expected to exponentially grow at an above average rate relative to the market. So examples are Amazon, Facebook, and Alphabet. The price per share is way up there, and these guys don't give off dividends. So I'm not really going to talk about growth stocks that much. I did do a video of why I don't invest in Facebook, so I'll post that link on there as well. But I really like the dividend stocks, okay? If you see my bottom comment, I said we are not going to focus on growth stocks because they do not give off dividends. So, number 2, dividend, aka yield stocks. They are the stocks of choice for people who are income seeking like myself. This is what we are going to focus on. They come in many forms as a stock, a public or private rate, stocks or ETFs, or even bonds. So here's the type of stocks that I'm invested in. I invest in real estate investment trusts. They come in public or private forms. I will do a review on Fundrise as well as Rich Uncles. Those are private rates, which I will go over. Rates are corporations that own and manage a portfolio of real estate properties and mortgages. Anyone can buy shares in a publicly traded REIT, and we're going to focus on REITs that give off monthly and quarterly dividends, okay? So here's another one. An exchange-traded fund is a collection of securities such as stocks that tracks an underlying index. Most ETFs try to follow or beat the S&P. I will go over the S&P in a later lecture. ETFs can contain many types of investments, including stocks, commodities, bonds, or a mixture of investment types. An example that I'm going to provide is SPHD. I'm going to do a review on that. That is one of my go-to stocks, and I will discuss about it. It is a high dividend, low volatility stock that gives off monthly dividends. It is a huge portfolio that it consists of real estate investment trust and stocks that follow the S&P and that are really good, that give off dividends. So ETFs can come in many forms, which include bond funds, rate funds, or high dividend stocks, which I gave an example of VYN. Yield stocks. I try to focus on stocks that are beating the S&P that will grow in price per value, which will increase in dividends over time. Money will make money, which will give off nice dividends. So you try to find, there are like stocks, like dividend income stocks that aren't really going to grow. If you look at them, they're going to just show like a waveform that really doesn't show growth. But there are ones like SPHD that are growing, and then the price per share is going to go up over time. Same with VYM, the price per share is going to grow. If you saw that diagram of the hypothetical growth of $10,000, that's pretty nice. So usually the stocks that are going to grow over time, they don't really give off a big percentage, but they're going to grow and grow and grow. And then once they start getting higher with their price per share, the dividends will be better. So stocks and funds that give off a strong dividend. Some of them won't really grow, but the monthly dividends are attractive. I will go over some special stocks that I'm investing in, or funds that are that give off high dividends. They're not really going to grow, but they're going to give a strong dividend. Some of them give off 11% annual, an annual dividend of 11%, which is really attractive. It's not going to grow, but it's pretty nice to make some extra cash on the side in the future. So this is something that I'm going to discuss and go over certain type of rates that give off monthly dividends. So let's go over this. What is the S&P index? I quoted Investopedia. I really love that site. I'm not really going to do a review on them, but they really give a great example of the S&P and a definition of it. So the S&P, or Standard & Poor's 500 index, is a market capitalization weighted index of the 500 largest U.S. publicly traded companies. The index is widely regarded as the best gauge of the large cap U.S. equities. Other common U.S. stock market benchmarks include the Dow, or the Dow 30, and the Russel 2000, which represents a small cap index. So when you compare your stocks, you want to see how it does compared to the S&P, Dow, or Russell. Sometimes you can do all three. Sometimes you can just do the S&P. So here's the S&P versus the Dow. The S&P 500 is often the institutional investor's preferred index, given its depth and breadth, while the Dow Jones Industrial Average historically has been associated with the retail investor's gauge of the U.S. stock market. Institutional investors perceive the S&P as more representative of the U.S. equity markets because it compromises more stocks in all sectors. Well, I am invested in an ETF that follows the Dow, and I will go over that in my future videos, so make sure that you follow my channel and keep an eye on these. The Russell 2000, the S&P is a member of the set of indexes created by the Standard & Poor's company. The Standard & Poor's set of indexes are like the Russell index family in that both are investable, market capitalization weighted indexes. Therefore, it is important to compare your stocks to these three indexes. I like to compare them against all three. If they are beating these indexes, you are in great shape. So there are a few of them that are actually beating them. I will discuss some of them with you guys in my reviews on stocks that I invest in. Sometimes they're neck and neck, sometimes they're close, sometimes they fall a little bit below the S&P, but they're still pretty good. So that's something that you need to consider. So this is my lecture. I want to go over one more thing in my conclusion. I want you to be smart. I want you to be patient. I want you to look for the stocks that you have a passion for. I want you to like, comment, and subscribe to my channel. I will start discussing the stocks, websites, and products that I invest in. My lectures will include investing in an IRA versus a Roth IRA. I will discuss compound interest. Investing in yourself pays off dividends in the future. And again, thank you for listening to my lecture. I want you guys to like, comment, subscribe, let me know what you think, and you guys have a great weekend.